Okay, so yesterday during the live session, I had showed you guys my anticipation for the dollar, and it was interesting to see that the dollar, the euro, USD played to script, and as well the analysis I gave you guys on gold actually played to script yesterday. So today I wanted to do a recap to show you guys why we took that buy yesterday on gold, and also what I'm looking at on gold today. Today I'm just going to be analyzing, I think, only gold today. So yesterday we did an analysis from the higher time frame. Remember that it is always important for you to start your analysis from the higher time frame so you can determine the institutional order flow of the higher time frame, or simply put, directional bias on the higher time frame. And we're doing that from the monthly, the weekly, and the daily time frame. So we took a look at gold on the monthly time frame, and it was clear enough that gold was bullish. Why? Because look at the candles on the monthly time frame. It's been showing a lot of bullish momentum, a lot of buy momentum on gold monthly time frame. So price created that expansion and traded into that fair value gap right here. This fair value gap on the monthly time frame. So price traded into that fair value, and we just saw that two candle rejection theory coming into play. First candle closing above the fair value, the second candle also closing above the fair value gap. So that was literally a buy reversal pattern. Then on the weekly time frame, of course, we still saw the same thing. Price traded into the bullish order block here. You see that large range bullish order block. We would measure 50% of the order block as the order block mean threshold. So price traded into that level on the weekly time frame, and also created a swing low, 3 candle price pattern with the middle candle having the lowest low. That is a typical, price action reversal pattern. And as soon as price starts to take out the high of the third candle, that will give us the opportunity for us to look for buy setups on the weekly time frame. And where is the drawn liquidity? Of course, the old high right there is the target. That's where institutions are going to trade into. All right, so on the daily time frame, what did we see? On the daily time frame, we're looking at market structure, price action creating structure in line with the order flow. Okay, price action creating structure in line with the order flow. So we saw that the daily time frame had been creating higher highs, higher low. See that shift of structure again, return into the bullish mitigation block with a fair value gap right there. That was a buy setup. We bought again, expansion, retracement into the bullish order block by the left. Remember, in a bullish order flow, bullish order blocks would support price to go higher. Let me come again. In a bullish order flow, bullish order blocks will support price action to go higher. So you can see that price traded into the bullish order block here. We bought again, expansion higher, return into the bullish order block here. Again, expansion higher, return into the bullish order block. Do you see that? So price action constantly finding support at the bullish order block. All right, that's a sign that we are also in a bullish order flow. Okay, you see, the whole concept of order flow and directional bias is very important, because if you don't figure out how to determine directional bias, once you understand how to determine directional bias on the higher time frame, and you are able to, now refine your setup or plan your trade setup on the lower time frame using higher time frame directional bias, that is the only time you're going to experience consistent profitability in the market. This is why, I forbid my one-on-one students and even the students at the regular mentorship from taking trades that are not in line with the higher time frame. If the higher time frame is not ready yet, nothing is ready. You're going to be manipulated a lot of times. You're going to lose trades. You're going to keep taking trades, and you're losing trades because you do not have the patience to wait until price action is ready to move on the higher time frame. Institutions are only positioning their trades on the higher time frames. That is why the drawn liquidity is always on the higher time frame. We are more interested in paying attention to the higher time frame draw on liquidity. Okay, so for us, we're looking at the high here, relative equal high. You can see there's a fair value gap right above that. That's drawn liquidity, and the equal high right there. So yesterday being Tuesday, what did we see? We saw that price action had traded into that bullish order block on Monday, and on Tuesday opening, of course, we were looking to buy. So on the 1 hour time frame, that was where I saw the setup for the buy yesterday. It was very simple, very simple, very simple. Okay, it was very simple. So look at what happened yesterday. Price action on Friday took out that old low. You see that old low? What did we now see? Created shift of market structure bullish on Monday. That expansion higher. And yesterday, Tuesday, I had outlined in the last session, in the last live session we had. Some of you who have not watched it, you should go to the previous video. You know, before this video, the live session, that was where I did the analysis, and I showed clearly that we are looking at price action returning into the bullish breaker here. Specifically, I outlined that high, and I said we're looking to take trades from this high, and I got a trade here on 15 minutes time frame, I think 15 or 5 minutes time frame, and we bought into the drawn liquidity right there.